trade association.
Hello everyone, my name is Norzana and welcome to this presentation about trade associations. Let's begin by understanding what a trade association is and how it is defined, particularly in the context of income tax regulations. With effect from the year of assessment 2009, a trade association is defined as any group of persons, partnerships, or a combination of both, formed with one primary objective, to safeguard or promote the businesses of its members. This means trade associations act as a collective voice working to address common interests, challenges, and opportunities in a specific industry or profession. Now, here is an important point about trade associations in relation to income tax. For tax purposes, a trade association is treated as a body of persons rather than a partnership. This classification has significant implications for how they are taxed and operate legally. In essence, while the members of a trade association collaborate like a partnership, they are viewed as a separate entity under tax law. This ensures streamlined governance and compliance for the associations and its members. Now that we understand what a trade association is, let's dive into the conditions that an organization must meet to be recognized as a trade association. First, an organization will only be regarded as a trade association if it fulfills these two essential conditions. The first one, all of its members must carry on a business. This means that the association's membership must consist entirely of individuals or entities actively engaged in business activities. Its objective must be to safeguard or promote the business of its members. In other words, the organization must focus its efforts on advocating for protecting or advancing the interests of its members in their respective industries. Now, here's an important clarification. If an organization allows memberships not only for those who are in business, but also for individuals who are solely in employment, then the organization will not be regarded as a trade association. Now that we have covered the definition and conditions for recognizing a trade association, let's look at some real-world examples of organizations that fit this classification. Firstly, we have MICCI. MICCI is a prominent organization supporting international trade and investments in Malaysia. Its primary focus is to promote and safeguard the business of its members. And the second one we have FMM. FMM serves as a key voice for the manufacturing sector in Malaysia, working to address industry challenges and drive growth for its members. And the last one, the third one, we have NCCIM. NCCIM represents the interests of business communities across Malaysia, advocating for the policies and practices that benefit its members. I hope this has given you a clear understanding of the key points. Now, let me hand it over to Sanya, who will elaborate on equally important topic, which is resident status. Sanya Haifa, over to you.
Okay, next, my turn. I want to explain about resident status of a trade association. Resident status of a trade association is determined based on tests laid down under Section 8, Subsection 1, Subsection B, and 8, Subsection 1, Subsection C of the ITA. These tests are similar to those used to determine the resident status of a company that is a trade association is resident in Malaysia for the basis year the management and control of its business or affairs are exercised in Malaysia by its controlling authority. Once the resident status has been established for the basis year for a year of assessment, it shall be presumed until the contrary is proved that the trade association is resident in Malaysia for the purpose of the ITA for the basis year for every subsequent of assessment. Next is sources of income, which mean that income derived from business, rent or other than that, classes of income under Section 4 of the ITA by a trade association is assessed in the same manner as that of any other person. Okay, for sources of income, divide into two. First is business income. For those classes of income chargeable under Section 4 of the ITA, a trade association resident in Malaysia is deemed to have a business sources in respect of any amount receivable which is of a revenue nature, including entrance fees and subscriptions. The basis year, which is the calendar year, is taken to the basis period for the deemed business income. For the second is non-business income, specifically specified under Section 4, for example, interest, dividend, employment, rent and royalties, which are not considered as part of a business sources.
Trade associations also receive special donations or subscriptions for specific purposes such as alterations of building, improvements, and repair. In deciding whether the receipt is to be included as gross income from the deemed business and the deductibility of the expenditure incurred, the general principles of revenue and capital must be applied to such donations and subscriptions. Thus, special donations to a building for fund or altering or reconstructing a building would be regarded as capital receipts, and expenditure incurred thereon would be regarded as capital expenditure, which is not deductible against gross income. Revenue receipt will be recognized upon the completion of the project. In terms of expenses, all outgoings and expenditure connected with the revenue receipts in respect of the deemed business source are regarded to have been incurred in the production of the gross income from that business. These outgoings and revenue expenditure will be allowable deduction in arriving the adjusted income. Since a trade association is deemed to have a business source, it is thus eligible for capital allowance in respect of qualifying asset used for its deemed business activities.
Today, I'll be discussing the Income Tax Exemption Order number 19 of 1995, focusing on tax exemption for association. Let's dive into the key points. First, we have member subscription. Member subscription are exempted from income tax. These are fee collected from members to join or maintain their membership in an association. Such fees are considered a vital sources of funding for association and are not subject to tax under this order. This exemption help association sustain operation and provide service to members without additional tax burdens. Now, let's talk about interest fee. Interest fee, which remain taxable. These are one-time payments made by members when they join an association for the first time. Unlike subscription, interest fee are not covered by the exemption. The rationale is that interest fees are distinct from ongoing contribution and are treated differently under tax law. Under this order, a portion of common revenue expense and capital allowance is receipted to gross income. This means that only a certain amount of this expense can be deducted from taxable income. Firstly, we have revenue expense. Revenue expense that are considered permanent losses or are disregarded are not allowed as deduction. These expenses do not reduce the taxable income under the order. Such expenses are viewed as non-deductible for tax purpose. Under the other hand, capital allowance are treated differently. They can be carried forward to the next year if they are not fully utilized. This means any capital allowance from this year can be applied to reduce taxable income in future year. Now, I will explain how to calculate common revenue expense and common capital allowance related to exempted income. First, to calculate common revenue expense, we use the formula A times B per C. A is a common revenue expense, B is a gross income from member subscription fee, C is a gross income from business sources. This formula will help determine the portion of revenue expense attributable to the exempted income. Now, for common capital allowance, we use the formula D times B per C. D is a common capital allowance, B gross income from member subscription fee, C gross income from business sources. This formula will help calculate portion of capital allowance attributable to the exempted income. This formula will help allocate expense and allowance proportionally to the exempted income.
For tax rate, a trade association that is resident in Malaysia will be taxed at scale rate similar to those applicable to a resident individual as specified in Part 1 of Schedule 1 of the Income Tax Act. A non-resident trade association will be taxed in accordance with the general provision of the ITA applicable to non-residents at the tax rate of 30%.
Hi, next I will explain example question for the trade association. The question asks to compute the chargeable income for Synergy Association for the year assessment 2023. First, we need to calculate the gross income. Gross income include member subscription fee, seminar fee, trade association activity, and the last one, dividend. Amount of dividend will be tax exempted. This is because it's single tier, or any foreign dividend also be tax exempted. The amount of total gross income is RM 850,000. Next, calculate common expenses. As mentioned in additional information, common expenses included director fee, employee remuneration, and miscellaneous expenses. The amount of common revenue expenses is RM 250,000. Then, with that, we can calculate common expenses and capital allowance for each of the income. Formula for the common expenses is common revenue expenses multiple gross income for each income divided by the gross income for each business sources. Then formula for the capital allowance is common capital allowance multiple gross income for each income divided by the gross income for each business sources. Overall, common expenses for the subscription fee is RM161,765. Next, common expenses for the seminar fee is RM35,294. Then, trade association activity is RM52,941. Move to the capital allowance for the subscription fee is RM22,647 and for the capital allowance seminar fee is RM4,941 and the last one trade association activity is RM7,412. Next is show the statements of chargeable income of Synergy Association for the year assessment 2023. First, member subscription fee. Member subscription fee income minus with the common income and capital allowance to obtain the amount statutory income, which is RM365,588. This amount will be tax exempted in arriving to chargeable income. After that, statutory income for seminar fee. Seminar fee will be minus by direct expenses, which is organizing cost for seminar, and minus with capital allowance. The amount of statutory income is RM59,700. Last, trade association activity. Trade association activity income minus with direct expenses, which is consultant fee, and capital allowance in arriving statutory income. The amount is RM74,647. Furthermore, the chargeable income of Synergy Association is RM134,412. Include statutory income, seminar fee, and trade association activity. Member subscription fee will be tax exempted. I think that's all for me. Thank you.
That wraps up our presentation on trade associations. Thank you for your time and attention. We hope you find our presentation insightful and informative. See you guys in another video. Don't forget to subscribe, like, and share. Goodbye everyone!